Very good afternoon. Very good afternoon, everyone. How are you? I hope you all are doing good. So, welcome back in the editorial analysis series. Before starting today's editorial, let me clarify 2-3 points first. Okay. First thing, that these classes, since the offline batch has been started, so there's a lot of work, so it is becoming difficult to take these classes regularly. I have to take other classes as well, right? That's why sometimes you see whenever I get time, I try to take these classes. This is not an issue related to views. So I know you all are concerned. We are not concerned about views. We are concerned about the content and quality delivery. Okay. So need not worry about that. Don't worry about anything which is important. It is not going to miss out. Okay. You are not going to miss anything which is relevant as well as important for you. Rest assured. For all these classes, we will cover all these your reports and the editorials, everything, right? Just be patient and give us some time. I'll cover everything for you. Nothing will be missed out, right? Second thing, since we are covering the financial stability report simultaneously, so all those topics which we are discussing there, because I'm also analyzing those things for you, we are not just going through facts, so some editorials, they have been there which are related to your financial stability report data. So I'm not taking up those because then it will be a repetition only, right? Rather than taking something different which might be useful. Third thing, there's this editorial in between, say 12 to 16 July. I don't remember the newspaper exactly, but it talks regarding the Finance Commission. So Finance Commission is one of the very important topics for you for phase 2 as well. So I'll take up Finance Commission separately because it will require, I think, at least 40-45 minute class. So I'll take up your Finance Commission separately as a topic. It will be very helpful in your phase 1, phase 2 and all other examinations, right? So these were certain things which I wanted to clarify. Now let's begin. Also the budget related articles I'm skipping because whatever comes in the budget will be covered in the budget analysis only, right? So I don't want your time and energy to be wasted. Exam is approaching, so we will be very selective as to what is important and relevant for us, right? Very good afternoon. So let's start with the analysis now. As you can see, we will cover the editorials from 12th to 16th July today. Okay, 12th to 16th July, whatever I found relevant and important for you. So first thing, there's this report, KLEMS database, basically a provisional data. So it has been released by RBI. There are articles surrounding it. We will do 2 articles which are relevant for you. It will give you data related to employment, labor, productivity, all these things in your services, manufacturing, textile sectors and all, right? So this has been taken, and then further on these databases, there were articles, editorials which are not relevant because we will cover the news here only, right? Whatever the fact is. So you can see these editorials today. First one, this one has been taken from your business line. Okay, so it has been taken from your 12th July business line, and this one has been taken from your 11th July business standard. Okay, you can go and read these articles. They were talking about the same topic, hence been combined. So what is this editorial talking about? The editorial talks about the debate which has been sparked due to a data which has been published by RBI. So what is it? What are we going to discuss? The KLEMS data. KLEMS data. This is the news. So this data, it has been released recently by RBI. It has added to a lot of debate, right? It has added to amount of material for debate. So there are these debates going on. Why the data has sparked debates? Why the data is a cause of concern for all of us in all these sectors? We will look into them. These will be very helpful in providing data as well as understanding for you for all your examination. So employment and income, basically the concern is that employment and income, these two are the factors, you know, for which India has always been worried about. They have been at the forefront of debate as always. So employment as well as income have always been critical issues in case of Indian economy, right? Critical issues. This KLEMS data is also related to employment, income, labor productivity, all these things in. There may be certain data useful for your phase 1 as well, for MCQ as well, right? There can be certain data useful because this is in all of the newspapers right now, right? So the employment, income, labor productivity in your textile, construction sector, all important sectors, almost 27 industries it tracks, will be provided here. Okay, now so the author says, while the provisional estimates indicate a 6% employment growth in 2023-24, the highest in the database. So first thing which has been highlighted according to the database shows that there has been a 6% employment growth. 6% employment growth. 6% employment growth in 2023-24. Okay, this is highest in the database, this database KLEMS, 6%, but which goes back to 1980-81. So from that it is the in this present database it is the highest. A deeper industry wise analysis for labor intensive sectors raises some concerns. Now you have got what we are going to discuss. So basically the database shows that there is increase in the employment, but this is not the end of the picture. This is not to be, you know, something to be celebrated about. There are concerns. Concerns in what? There are glitches. What are the glitches? So the report says, or the editorial says, deeper analysis at the industry level, industry wise, whatever different industries there are operating, contributing to the growth. For labor intensive sectors, particularly we will be analyzing the condition of the labor intensive industries, right? What are labor intensive industries? Which are employing or deploying more labor in comparison to capital for their output or production activities. Yes or no, right? So for labor intensive industries, the data is not so satisfactory. This is the thing, right? Labor intensive sectors, they raise some concerns. So let's see what are the concerns. Before seeing these data and then analyzing the concerns, let's first understand what is this KLEMS. Okay, so it will be important current affairs for you as well. So KLEMS is basically a database. It is a database, okay. It is a part of research project supported by RBI. So it is a research project which is supported by RBI to analyze the productivity performance in the Indian economy at disaggregate industry level. What is the research does? So the research tries to analyze the productivity performance in Indian economy. Are you getting my point? So we are going to deal with the issues which are there with the labor productivity, with the industrial or sectoral productivity. Only growing numbers are not important. How much productive, how much efficient you are is also something very important and relevant, right? So this is a database which is supported by RBI in this research related to Indian economy's performance, particularly related to labor intensive sectors and their productivity. Is that clear to everyone, right? So why do we call it as KLEMS? The input measures incorporate various categories. So on what basis, on what all inputs is this database then created or finalized? So the data is mainly related to K. So K, as you know, is used to represent capital in economics, right? K, capital K is something which we use to represent capital. So capital K, then labor L, then energy capital E, then materials and services. So that's why it is known as KLEMS. So this is the database which will give you information regarding capital, labor, energy, materials, services, all the industries related to these sectors, productivity related to these sectors. Is this much clear to you all? What is KLEMS? And why the data is a cause of concern? Because this puts a question mark on the productivity, not only on the growing numbers, right? So let's discuss further. We have seen what is KLEMS. Now, so the analysis starts. Listen carefully. First point which we have is, it is saying that agriculture and allied activities. Agriculture and allied activities, the largest employment generating sector in the economy. So, presently the largest employment generating sector in the economy is your agriculture and allied activities, like your food processing industries, all those things, right? Agriculture and allied activities. They have consistently demonstrated lowest labor productivity. Lowest labor productivity. So the highest employer in India, or the sector which is the highest employment generator in India, has the lowest productivity. Isn't it important? Isn't this a cause of concern? It is, right? What are the areas in which we are lagging behind? So overall growth is not something we should celebrate. We have to look into these imbalances, growth imbalances. Are you getting my point? So remember this thing. Agriculture and allied activities being the highest employer, they have witnessed the lowest labor productivity according to the database. Now, if we try to measure it, as you know, value added per worker, how much value per worker in these industries is adding, so at constant prices. So this data is based on constant prices or base year prices. You know what are constant prices? So we do not take into account the inflation or the current year prices. Here we are taking the prices for the basket of all these goods and services which are concerned, which the industry is concerned. The prices are taken for 2011-12 base. So these data is related to constant prices. It is based on constant prices, right? Among the 27 industries or sectors included in the database. So now this figure is important for you. Remember, KLEMS includes almost 27 industries or sectors. I want you to remember this data, okay? I want you to remember this data. It might be useful. So 27 overall industries are reflected here. Among all of them, this is the data that they have the least labor productivity, right? This underscores the pervasive issue of disguised unemployment within the sector. We have seen the data, we have seen the problem. What is the reason? Disguised unemployment. So what is this concept of disguised unemployment? What is disguised unemployment? Tell me, anyone? You know, disguised unemployment is a cause of concern for Indian agriculture for so long. This is not something new. So you need to understand this concept. What do we call as disguised unemployment? Disguised unemployment. Disguised, this word, you know, means something which is hidden, chupa hua types, right? So disguised unemployment is, for example, there is this agricultural field and a family which handles the farming activity in that field. If only 2 workers are required to do all the work very effectively, efficiently, but the entire family, say of 6 members, is employed in that field only, self-employed, right? So those 4 extra are disguisedly unemployed, which is to say, this unemployment means that unemployment is hidden. By hidden, we mean it seems that all of the members, all of the 6 members of the family are employed, so they are contributing. But actually what happens is that only 2 members were required, right? So 4 extra are not adding anything to the productivity. This is known as disguised unemployment. Have you understood that? This is a huge problem in Indian agriculture, where there are 4 workers required, 6 are working. Now these extra 4 people in our example, they could have worked in different industries, could have earned a significant amount of income, isn't it? So this is a problem. So you can relate this concept in your answers, that disguised unemployment is still there, right? In the agriculture sector, this database of the RBI, KLEMS, it has highlighted. So this debate has sparked again. We have not been able to eliminate this unemployment, this type of unemployment from agricultural sector. Next thing which is highlighted here is labor productivity growth. Labor productivity growth turned negative in 2019-20 and 2021 because of increase in the labor force in the agriculture. So what happened in the pandemic period, if you remember, what happened during the pandemic? So you all remember this trend. During the corona pandemic, all other industries, they got hit badly, but the Indian agriculture was an exception. Why? Whenever there is a pandemic, there is a lockdown, you might not require more petrol, you might not require more diesel, you might not require more clothes, right? More accessories, more bags, anything. But you cannot live without food, right? This is the simple logic. You cannot live without food. So agriculture was still going on. Now, since other industries got shut down, many people got fired out of their companies, their works. So there was a migration towards rural areas, you see, right? This migration has not reverted yet. We have discussed this thing as well in one of the editorials, that all those who migrated during the pandemic period to their homes, to the rural areas, for finding alternative work, they have still not come back. They haven't came back, right? So this is the problem. Agriculture was there to provide the employment. So what happened is everyone got employed in the agricultural field or the sector. Hence, more people getting employed than the requirement. The labor productivity actually, it turned negative. So it turned negative. This is clear to all of you? This much, right? You have gone through the points. I hope this much is clear. So labor productivity, that's why it actually turned negative, not only declined. Now further analysis says, let's see what the author says further, that the share of labor income in the gross output of the agricultural sector has seen only a marginal increase of 2 percentage points from the levels recorded in 2011-12. What is this labor income? What is this labor income? So, you know, what is this labor income? Anyone? Share of labor income in the gross output? So, whatever you are producing, say at the national level or at the state level, how much of that output are you devoting to pay income of all your labor, for example, right? So, it is indicative of their standard of living as well. Are they getting benefit out of it, or the entire benefit is, you know, getting reaped by the capitalists? Is there a concentration of wealth, or is it, or the growth prospects are inclusive? So here one more dimension of inclusive growth comes into picture. You can connect these dots to inclusive growth as well, isn't it? If despite growth, the labor income or share of income with this growth is not increasing, that is showing off less inclusive growth, right? So this is one of the other problems. Now, the report says that the share of labor income in the gross output of agricultural sector has seen only a marginal increase of 2 percentage points from the level recorded in 2011-12. 2011-12 के level से अभी तक if you see only a marginal increase of 2%. Only a marginal increase of 2% is there in the share of labor income. This is a concern, yes or no? Yes, right? This is a cause of worry, isn't it? Yes, are you getting my point? You are catching up with the analysis? So this is a cause of concern, isn't it? Now, despite an annual growth rate of 4% in gross output since 2017-18, the labor income share has remained at 45% only. So if you see this from 2011-12 basis, we have seen that the growth has been, say, according to the database, it has been 6%, right? Out of this, from 11-12 basis, the growth in the labor income, share of labor income has increased just by 2%. If you see this from on the basis of 2017-18 data, so despite annual growth rate of 4% in gross output. So gross output in this sector, despite growing at an annual rate of almost 4%, the labor income share has remained at 45% only. What does it mean? It means despite this growth, the share of labor income, this growth, this GDP, this income which is allocated to labor has, not witnessed a significant amount of growth. So this is a cause of worry. Cause of worry, right? Now, this stagnation indicates that the benefits of output growth have not significantly translated into improved labor income within the sector. Now, what does it indicate? It indicates that these benefits of the growth, they have not been translated. They have not been translated into improved income levels. That's why you see still agriculture being one of the largest employers, but productivity is less, share of labor income is less. So this is why this report has sparked a debate. Are we going into the right direction? No, right? So then where is this proceed going on? Or the income which has been generated is going where? Right? Into the hands of few capitalists. Next, if you see, so this much we have discussed was regarding agricultural sector. This much is regarding agricultural and allied sector. Allied sector, right? Next, data is related to construction sector. Again, a very important sector. Construction sector. So the report says that the largest employer after agriculture. So again, this is important for you. Who is the largest employer after agriculture? Is your construction sector. Okay. It has experienced fluctuating labor productivity and has yet to return to the level seen in the 1980s. So it has also experienced fluctuations in the labor productivity, right? This is again not a good sign. So agricultural and allied sector being the largest employment providers, they have also seen fall in the labor productivity. Then your construction sector comes second in terms of employing people after agriculture, and allied sector has also seen fluctuations, sharp fluctuations in terms of labor productivity. So this is not a good sign for your economy, not a good sign for your economy, right? So remember these points. Now moving ahead with the analysis. So more data related to construction sector is there. What is it showing? It is showing that the share of labor income in the construction sector's gross output has remained relatively stagnant. So we have seen that the share of labor income in your agriculture and allied sector has also been stagnant almost at around 45%, not a very sharp increase from the previous levels. Here as well, the share of labor income in the construction sector has been stagnant, right, ranging between 27 to 29% only. So this has been the range. It has not been able to breach the range. It has not been able to breach this range. I hope this is clear, right? Next, let's discuss. This stagnation suggests that similar to the agricultural sector, the gains in output have not been sufficiently reflected in the income earned by workers and largely enjoyed by the capital owners. So, who is enjoying this growth then? Where is this growth proceed going? So, this is being enjoyed by the capital owner who all have invested their capital. This is not going down towards the labor strata. Are you getting my point? So their standard of living is not improving. Only the capital owners are enjoying the benefits. Is this clear? Now, given these, I hope you have read these points, right? First point, second point. Just go through these points simultaneously, so you need not go through them again and again, right? So after saying all this data, after analyzing this trend, in the area of textile, there is also the situation which is alarming. So the situation related to textile is also alarming. We have seen the alarming situation of agriculture and allied sector. We have seen the alarming situation in construction sector, the labor income, share of labor income remaining stagnant within a particular range, which is 27 to 29%, right? Now comes the textile sector. So in the area of textile, tell me, textile products, leather, footwear, are these very important sectors for Indian economy or not? Anyone? Are these important sectors for Indian economy? Do they have a huge contribution in India's economic growth? Yes. So then in the area of textile, textile products, leather and footwear, the database has revealed that there has been a significant rebound in employment growth in 2021 following a decade and a half of either negative or negligible growth. So growth has been there. Growth has been there in the textile sector, textile products, leather, footwear, etc. Okay. There has been a significant rebound in the growth, right? Which was earlier very negligible or even sometimes negative. But the story does not end here. But then what is the debate? The debate is that despite this positive turnaround or despite this rise in the growth, the employment levels in 2021-22, they remain substantially lower than those recorded in 2004-05. So this sector, despite growth in the sector, it has not been able to employ a lot of people. This is the cause of concern. It has been not able to employ a lot of people. Also, the share of labor income, again, the share of labor income in the gross output of the textile industry has not surpassed 15% since the post-liberalization period. See, when was liberalization done in India? When were LPG reforms done in India? Tell me. When were LPG reforms done in India? Anyone? You don't know the liberalization, privatization, globalization reforms? 1991. Is there anyone? कहाँ चले गए सब? 1991, right? 1991. So, despite those liberalization efforts and all these reforms which were done, you see, since then the share of labor income in the gross output has not been able to cross 15%. This is not something from the basis of previous year. This is something since post liberalization period, since after 1991, say, right? So since then 15% share of labor income, there is a huge problem with that. So it is reflective of a huge problem in this industry. Now, one thing which I want you to remember, what is so peculiar about this industry, this particularly textile industry, note here that being one of the most labor intensive industries and predominantly owned by micro and small enterprises, the failure of the textile sector to generate employment reflects structural flaws in the economy. Now, this is a very much debatable cause of concern. Why we are saying that? So remember, because you know this industry, this textile industry, as we have discussed, is one of the most labor intensive industries. So it is dependent heavily on the labor more than the capital. Second thing, it is predominantly owned by micro as well as small enterprises. So your MSME sector employment is here. If you are not able to revive the textile industry, then your MSME sector gets hurt, micro and small enterprises. It is predominantly owned by micro and small enterprises, right? So any failure in your textile industry to generate employment levels, sufficient employment levels, it is a big structural flaw in your economy, because then your priority sector, one of the priority sectors, the MSME, gets hurt badly. Have you understood the severity of these conditions, these sectors? Everyone? Yes or no? So this is the severity, why we are discussing this report. This is the reason, right? Are all these points clear? Shall I move ahead? All right. Now, so the concern extends beyond merely generating job opportunities to consider where these employment opportunities are being created and what share of output is allocated to workers. So your take from today's editorial, these two editorials, is that only employment generation. So employment generation is something we usually talk about, right? This is important, but only employment generation is not sufficient. Based on this KLEMS database, we get to learn that, you know, India requires to increase the share of output which is allocated as labor income. So we need to increase the share of labor income. We need to increase the share of labor income. Economic growth at the expense of labor income share will not be sustainable in the long run in a labor abundant country. So you can relate this to another important phenomena which India is going through right now. This is demographic dividend. We have discussed what is demographic dividend a lot number of times, right? So demographic dividend, when we are having the most population in the working age group, if you want to reap benefit out of it, you cannot go with all these trends. This is a huge cost which this opportunity of demographic dividend is paying. Yes or no? Agree with me? So try to relate this data, these trends with all these concepts. How can you reap the phase of demographic dividend then? If in a country which is very labor intensive and labor abundant, labor productivity is low, share of your growth going as income to the labor is very low, it has been stagnant since years, more than decades, right? Is not a very good situation. So only employment generation will not be helpful. Employment might be generated, but then only the capital owners, capital investors are getting benefited. Labor is not going to is not getting benefited. So that growth is not going to be sustained for a long period of time. And then again you will see unemployment levels rising if the labor is not satisfied with their earnings in your these sectors which we have talked about, right? Now, so this was related to first article. I hope you have understood this article. Any doubts? Any doubts in this editorial? Have you understood the KLEMS data? Now, so we have seen the data, we have seen the trend, we have seen how it can be related to all these concepts like inclusive growth, like demographic dividend, all these things. Why is it alarming? What we need to do? We need to focus along with employment generation on increasing the share of labor income. So this was the first set of analysis. The second comes here. Again, this is something very important since your one of the priority sectors is MSME. So anything related to MSME is important, right, for all your examinations. So this has been taken from your 16th July business line. 16th July business line. Just read the heading of this editorial and then the title I have provided to this. Then I will proceed with the analysis. Read this. Now at the end I will ask you, why have I kept this title, rewarding the discipline? Okay, so at the end you answer me why this title has been chosen. Is this a reward? We should go with these rewards for MSMEs. This scheme is a reward or not, right? So I'll come to this question at the end of this analysis. Let's see what is the author talks about. So the heading you can see, credit to. So this is related to a credit line scheme offered by government under Ministry of Finance, right? First of all, let's see what is the news. Let's see what is the news. So in India, author says it often takes, a crisis to spur an effective policy fix to a long-standing problem. India is a country where, a prudent policy does not comes into effect unless we witness a huge crisis. But this scenario is changing nowadays, right? With more focus on governance, with more transparent, effective governance coming into reality. So we are now witnessing the reversal of it. So there's this scheme which the author talks about. What is the scheme? So it is the Emergency Credit Line Guarantee Scheme, ECLGS. Emergency Credit Line Guarantee Scheme, ECLGS, introduced by the center as a stopgap arrangement to keep credit flowing to micro, small and medium enterprises during COVID, has proved to be one such instance. So the author is saying, out of this crisis which we have witnessed in form of corona pandemic, there is something which India has got to learn, as a story of success. So all policies are not to be connected with some instances of failure. There have been success cases as well, right? There have been success stories as well. So the author is saying that this scheme, which gave took birth, due to the COVID pandemic, is such a story of success. Let's see what is the success the author is talking about. So a report in this newspaper shows only this business line has also, there has been a report in business line which has also shown that ECLG scheme extended liquidity support over 3.6 lakh crores to 1.19 crore businesses in just 3-year tenure between 2020 and 2023. So first try to understand what is this scheme. This scheme has been a revolutionary step for MSME sector. You all know that government is continuously trying to expand credit availability to MSME sector because it is in a need of credit, it is in a need of fund to operationalize it, to fund its operational cost and all these things. Now what happened during the pandemic, that the MSME sector got hurt badly, so it was in dearth of funds. It was in dearth of funds, yes or no, right? So this scheme came as a savior. This scheme came as a savior, and that's what the data is showing, that this scheme provided liquidity support of over 3.6 lakh crores. This is the amount to 1.19 crore businesses in just 3-year tenure, say 3 financial years, 2020 se leke 2023. This is just a glimpse of it. Now coming to what the scheme is actually. So what is this scheme? What is this scheme? Why are we talking about it? Why is it important for MSME sector? How other schemes or how the policy making, policy implementation in future course of time in case of India can learn from this success, right? So what is this scheme? You just try to read these provisions. Try to read what is this scheme, then I'll explain it to you. If you find anything difficult to understand, then you can ask me. Just go through the slide once, then I'll explain you. Read this? So what is this scheme? This emergency credit line guarantee scheme, it was launched in 2020 as a part of Atmanirbhar Bharat Abhiyan. So Atmanirbhar Bharat Abhiyan, one of the very important projects of Government of India, where we want to make ourselves very independent, right? We want to substitute our imports for a lot range of goods and services, right? So in a series of promoting Atmanirbhar Bharat, this scheme has been launched. Now this, as the name suggests, so emergency credit line guarantee scheme. Now this is particularly targeting your MSME sector. MSME, you all know what is MSME sector, right? We have discussed this sector number of times in the analysis only. Micro, small and medium enterprises and other business enterprises as well. What is this credit line? So can you please tell me, anyone, how is a credit line different from a loan? So this is emergency credit line. If these businesses, these MSME sector related industries, they are in, say, need of emergency funds, so under this scheme they are provided funds, or they are provided line of credit at concessional rate of interest. At concessional rate of interest. What is difference? What is the difference between line of credit and a loan? Tell me, anyone? What is the difference between a line of credit and a loan? So we have discussed this concept in previous classes as well, a line of credit and a loan. Loan is basically where you get the amount, so you only have one-time access to the loan. You utilize that amount, then you have to pay back the principal plus the interest. line of credit is much like credit card, right? So line of credit means you have multiple access, more than once access to that fund. You can use it anytime. It is not that you only have one time access. So once, unless you exhaust the limit, have you understood the difference? Line of credit and loan, right? So this is emergency credit line, this is not loan. Yes, Shreya, line of credit is constant funding to keep operations going on, right? Good attempt to explain this. Okay, right? So this is line of credit. I have explained you the major difference between line of credit and loan. So this is a kind of line of credit being extended to MSMEs to operationalize, to fund their operational costs and all those things, or even if they need emergency funds, in that case they can access this facility. Then its objective is to help these businesses meet their operational liabilities and restart their operations in the context of disruption caused by COVID-19. So it also came out of a crisis. So COVID-19 proved to be one of the huge crises which everyone faced, right? Now, there were disruptions caused to a lot of industries, and one such segment is your MSME, because these are smaller level, they don't have enough capital, they got badly hurt. So this has been provided by the government for MSME sector, so that presently whosoever are being operationalized, they can cover their cost, plus whatever industries they got shut down during COVID-19 due to any disruption caused by that crisis, they can restart their businesses. They can try or think restarting their businesses or enterprises. So that's how we are providing boost to the MSME sector, isn't it? So this is what the scheme is. I hope you have understood what the scheme is, right? Now moving ahead with the analysis. Why is it important? Why we are discussing in the editorial, or what is this success to talk about? So we have data now. So SBI's economic research, it has estimated that this has saved 1.5 crore MSME jobs. This is not something to be looked down upon, right? This scheme has been able to save almost 1.5 crore MSME jobs. So this is important. This data, this editorial is important because MSME is one of the priority sectors which we study, right? When we talk about financial inclusion, when we talk about financial inclusion, MSME sector cannot be ignored. You have to actively incorporate the MSMEs in financial inclusion as well. And unless you provide them with funds, unless you provide them with jobs, they cannot be included financially, isn't it? So this data is something which is showing the success, right? Next thing which you have, contrary to the original fears that NPA from ECLGS would blow up and saddle the exchequer with a large bill on guarantees, the scheme has ended with NPA of only about 22,000 crore or 6% of the loans. Now read this paragraph once again and then I'll ask you something. Have you read this? Now tell me, is this NPA big enough? Or if I ask you one thing, since you have been following the financial stability report, tell me one thing. The overall, if you see the NPA net as well as the gross one for India's banking sector, the overall NPA trend has been on a declining path or a rising path? Quickly. Tell me quickly. It has been on a declining path for the banking sector, including your NBFCs, or on a rising path? Declining, right? So you remember this from the report. Now, why am I saying that the NPA? So author is saying this much is the jobs saved by such kind of a scheme. Second thing author is highlighting, there were fears regarding this scheme. What were the fears? That you are providing line of credit to MSMEs which are not able to operationalize properly. It might add up to India's total, or say, gross NPA liability. It might add up to the gross NPA of the entire financial system, right? There were fears regarding that. But then we are saying that NPA have been there, but only about 20,000 crore, 22,000 crores or 6% of the total loans given under this scheme. Now, why am I saying only 6%? You will say, why 6% is only for you? This is not only for me. If we compare the data, then you only will analyze that 6% out of total loans for MSMEs is not a huge NPA. So, NPA have been there, but they have been very disciplined in paying back their loans. We will see, the data will show us, right? So, next paragraph, if you see, a 6% NPA figure may seem big today. It may seem big today for us when banks are sitting on a system-wide NPAs of less than 3%, because now Indian financial system is having a lower NPA. So, comparatively, you might say that this is a bigger NPA data. But it should be seen in context of severe dislocation surged by MSMEs during the pandemic. But if you see this in context of the damage caused by the pandemic to the MSME sector, then it is very lower. So, it was one of the badly hurt, severely hurt sectors, and in that case, despite that tragic activity which swiped away lakhs and crores of jobs in the MSMEs, lot of industries got shut down. Despite that thing, only 6% NPA is, that's why I am saying only, and the author is also saying only. Now tell me, would you say this is too much or a less or moderate? You are saying it is less? Okay. Why? Because we have compared the situation of MSMEs from what was their situation during the pandemic, right? So comparatively, it is less. Given the destruction caused by the corona pandemic to these industries, this is very less, right? That's why I have put that title, rewarding the discipline. So MSME sector, now you see, what are you able to understand? There is not a problem in the growth trajectory, not a problem in the discipline of paying back the loans, not a problem in the resilience of the MSME sector. The problem is that they have a lesser credit availability at concessional rate of interest. If you provide them with the opportunity, you see them growing, right? Now, what we can learn from this scheme? What can we learn from this? There is this committee, UK Sinha committee. Can anyone tell me who is this person, UK Sinha? Anyone? Anyone? Who is this person? UK Sinha? So, UK Sinha, there was this committee appointed, chaired by UK Sinha. UK Sinha has been ex-SEBI chairman as well. Okay? Indian diplomat as well as ex-SEBI chairman. Okay? Now, what we get to learn from this scheme and the success of this scheme, let's discuss that. So, the author is saying that this experience related to ECLGS, it should offer lessons to address the 25 lakh crore credit gap in MSME funding. Now this data is useful for you. You can quote this data in your descriptive or any questions related to them. What is the data? You can note down this data, everyone. Based on UPSC committee's recommendation, so this committee report has highlighted that in the MSME sector, in your MSME sector, there is a funding gap. There is a funding gap of how much? 25 lakh crores. Credit gap, 25 lakh crores. So there has been a credit gap of 25 lakh crores based on the UPSC committee estimates. Now, why are we talking about this? So this scheme and schemes like this scheme in future can be used to bridge this gap, to reduce this credit gap in case of MSME sector. Yes or no? Right? This is a huge gap. So what is the problem in the MSME sector? That we need to have this much of credit availability. Credit availability is a question. So again, you have the problems and you have the solutions regarding MSME sector, which you can learn from today's this analysis. Then, while capping loan rates may not sync with the free market principles, also the author is suggesting to do this, to fund this credit gap. Keeping or having a cap on the loan rates is not something which is a good option, because you know it goes against the free interest rate deciding mechanism going in the market. Then what we can have is, then the success of ECLGS goes to show that MSME loans need to be reasonably priced. That you need to have reasonable price for these loans. What is price of a loan? What is price of a loan? It is the rate of interest, isn't it? So rate of interest needs to be concessional. You should not provide a cap on the rate of interest, but these should be reasonably priced, right, to foster the loan offtake, and then the loans can be provided faster, and then this gap can be funded via loans. Any doubt so far? Any doubt so far? So this is what the author is suggesting you. Now, the bulk of loans under ECLGS has been availed by retail trade and services firms, suggesting that this segment has a larger need for credit. Particularly if you see, all these loans provided by this credit line scheme has been, majority of them has been taken by your retail traders, not the wholesale one, right? So for retail trade it has been availed, and for services firms, So from this data you get to know that the retail trade and the services firms related MSME are the ones who are in the larger need of these credit lines. So government policy should target them. Government policies should target them. Then you see, the author says that lenders, particularly banks, should move away from collateral based lending models based on hypothecation of plant and machinery or inventory. With widespread digital adoption, lending based on easily verifiable cash flows of micro enterprises has become quite viable. Now, another solution offered by your author here is, so first thing that you should provide concessional or reasonably priced loan to all these sectors. Next suggestion by author is saying, so important suggestions these are, that you know generally we try to go with the collateral based lending activities, that you need collateral to reduce any chance of risk, or in case of a default you try to cover your losses, right? So the author here is trying to emphasize that you know all the lenders, particularly the banks, these banks, all the lenders, particularly the banks, since there is this widespread digital adoption, So digitalization of every services is there. Given that phase of digitalization, it is easier to verify the cash flows of all these enterprises, including the micro enterprises. Given the level of digitalization, it is easier to verify cash flows. So even because they are micro, small and medium enterprises, अगर उनके पास collateral होता ही अच्छे खासे अमाउंट में, तो उन्हें कोई भी बैंक लोन दे देता. Why is there problem? क्यों नहीं लोन मिल पा रहा है एमएसएमई सेक्टर को? दे डोंट हैव एनफ कैपिटल टू बी कैप्ट एज कोलेटरल, राइट? सो that should not form, or that should not come as a barrier in this process of growth of MSME sector. You can verify their cash flows during the previous periods and then decide whatever amount can be lended to them. Is it a good idea or no? Tell me. Anyone? By this concept, hypothecation of the plant and machinery or the inventory, we mean that we try to assess their loan paying capacity, credibility on the basis of this thing. How much plants do they operate, how effective it is, how economically viable it is, how much machinery do they have, how much inventory of stocks do they have. But since these are micro enterprises, they do not have that much capital, inventory, machinery and all. That's why having an analysis of their past cash flows would be a better option. Via that you can judge their credibility, as well you can provide them with the loan. Understood? This is one of the suggestions. The next thing, the author is saying that this ECLGS experience, it suggests that contrary to the perception, the credit behavior of MSMEs can be superior to that of the large corporates. Now read this line carefully. So this scheme experience suggests that the credit behavior of MSME sector can be superior to the credit behavior of your large corporates. Their ability, the ability of the MSME sector to service their loans, to pay back their loans, may be impaired during crisis like corona pandemic, but their willingness to do so is quite high once it is a business as usual. So what take you can have from this analysis is, despite lending to the large corporates, these MSME, the NPA, the default might arise due to some kind of crisis where their business activities gets affected. But once their business is in pace as usual, their willingness to pay back is very high. So chances of NPA are very, very high. So it is better to pay to such industries which are ready to be an active player in your course of economic development. Do you agree with me or with the author or not? Tell me. Yes? Now tell me, is this title relevant for the editorial? Do you agree that these MSMEs should be rewarded for their discipline, their willingness to pay back, their willingness to service the loan at time, as compared to the large corporates, those who have a huge capital, machinery, plant funding, right? There might be Sub cases, in case of sub crisis, there can be default, but if you see otherwise, MSMEs are very much disciplined in this case. Tell me, do you agree with this title now? So that's why I kept this title. I hope this was useful for you. Appropriate title, right? Okay. So any doubts from today's analysis? Anyone? I hope there are no doubts, right? I hope these were useful for you. You will try using this data, this trend in your answer writing and all. So these were a bit different from what we usually discuss, but again important for you, right? Thank you so much. I will continue with the analysis of further editorials which all are there. So most probably we will have a class tomorrow as well. We will try covering up all the relevant articles, right? Can we say that labor income is the portion of income labor is paid out of capital? Yes. Share of labor income is basically, say if your GDP is going by say 7% and your share of labor income overall, not a particular sector we are talking about, is say only 2%. That means out of that growth which your economy has registered by 7%, that income, that the proceeds of that growth are only 2% which are allocated as income to your labor working in the industries, right? Understood? Any further doubts, questions? Right? Okay. Okay, then thank you so much. I hope you will enjoy these sessions further as well, and I'll see you in the next class. Thank you so much for staying interactive and focused for such a long period of time. Stay tuned, keep on studying and revising. I'll see you in the next class. Have a great day. Thank you so much.